optical art. Okay guys, in this video I'm going to show you why plan B is wrong and what's going to play out is plan C. There are two possible scenarios how this will play out, but in the end the outcome is the same. I'm sure you know what the C stands for. So look, every single video I put out, every tweet I make is to teach you how to play these charts so you can know when to get in and get out without having someone tell you, hey, buy here, sell here. So this was a video I put out. This was on November 18th. I'll put a link up this video now. In this video I said, look, if we came down, the point you want to buy in is 55,600. Notice this line right here. This is this line right here. We came down, we hit almost exactly 55,600. That was your buy-in point. This video I put out on November 19th. We'll link up this video now. Notice how this line, this white line, had a price label here. So if we pushed up, this is a point you want to short. Had we pushed up sooner, it would have been 59,580. The point where we made contact was right here at 59,858. Again, if it was straight up, you can see this would have been 59,580. It's at an angle. It depends on when you make contact. That's why you need to have access to the charts. But we're going to cover this in detail. This was a tweet I made. This was November 20th. Showing that we got rejected here on the C1 chart, the H1 chart. If you have multiple charts with confluence, when you hit that line at the same time on both charts, that's likely a point too short. That's how that played out. Let's go on to, so this is the H1 chart. I made a tweet here. I said next good re-entry would be support levels below on H1 and C1. Different targets, but around 57,300 to 57,100. You can see how that played out. That was this line right here. Plus you had double support. You have this line going in this direction and this line in this direction. So that was the point you should have bought in. The next tweet, good place to short, could be 59,800. Swing trading. Guys, these charts are for swing trading. You can see what happened. We pushed up and look where we got rejected. Right here at 59,843, hence the perfect short. Multiple charts showed this. Look, 59,827 right here at this line. And you can see right here at 59,843, we're going to cover the K1 chart, which also is confluence, which made this an ideal point to short. So listen, I'm going to cover the K1 chart. I'm going to show you what I'm talking about and why plan B is wrong. There's two scenarios that's going to play out. Either we're going to push up to around 62,000 and then drop, or we're going to drop down to 54,000 and push up. So plan B insists Bitcoin will hit 98,000 by the end of November, even as markets fall. I think they're incorrect. That's not how it's going to play out. I'm going to show you how it is going to play out. Again, on this G1 chart I showed you, this green line has been a lot of resistance, a lot of support, became resistance again. So if we push up, the point to get rejected is going to be around 62,000. If we drop, the point to buy in is going to be around 54,000. This will make a lot more sense on the K1 chart. So this chart here I've talked about for a while. If you have not watched the video yet about the chart, I'll put a link up to now if you want to check it out. The point we're going to cover is right here before our COVID crash, this section right here. So let me show you that on this chart zoomed in. So right here you can see we had a head and shoulders. This was our left shoulder, this was our head, this was our right shoulder. We crossed this ring and we dropped down to where we pumped from originally. Again, I did cover that video if you can go back and watch it. So the point I want to show you now is over here. I said when we cross this ring, we would start dropping. We did start dropping, but this is the point I'm going to cover right now. So let me show you that on this chart. Let me scroll over to it. So again, this is what I'm talking about, the two scenarios that could possibly play out. Again, but the outcome will be the same. So as I showed you on the G1 chart, if we push up, your resistance will be right here at 62,200-ish. That will be very strong resistance. You can see this yellow line, actually the orange line right here. You can see right here we had support and support. Okay, so if this plays out, this is scenario one. This is your left shoulder, this is your head. If we push up, you will get rejected around 62,000. We will come back down potentially to 54,000. This will break. We might come back up, test its resistance, and then we will drop. Again, scenario one. Scenario two, if we do not push up to 62,000, how this will play out, notice I have this yellow line right here. So if we come down to test 54,000, this will be your left shoulder, this will be your head, we will make contact down here, this will be support, support, we will push back up, potentially ride up this, break it, this potentially we might find support, push back up, but we will break this point and come down. So again, scenario one and scenario two are going to play out the same. Once we break this point before this ring, it's all coming down. This is a huge bull trap. Plan B is setting you up to get bullish, so you'll buy in, you'll long it, it is going to drop. That is how it's going to play out. I warned you in advance. You can believe it if you want, or if you don't want to, it's up to you. If you do want to access charts, guys, the website's operatorcrypto.com. Link be pinned in the first comment in the description. That's it. Till the next video. I'm out.